Hey guys, Mike here. So, boy, what another fun day in the market and talk about volatility. And again, we're still following this playbook. Run it up overnight with the futures, gap us up in the morning, sell us down. Trump comes out about tariffs, and then you see a liquid waterfall some point in time, usually it's after lunch, which again it was today, and there we go. And so I understand the market is trying to price in a lot of stuff because he had actually a scheduled conference at 1:30. It got delayed all the way to 2:30. Something was going on about Taiwan Semiconductor, spending $100 billion here, building factories, and that's all great to hear. I'm glad to hear that, believe it or not. I really am. For more national security purposes than anything else, but I'm glad to see jobs, and they will be good paying jobs. But as soon as I'll show you the moment he talked about it, what happens in the market. Because remember, tariffs kick in tomorrow. The 25% on Canada, 25% on Mexico, and then an extra 10% on China, supposedly. It's 5:30 my time. I've still not seen any tweet come out delaying this yet, but it absolutely can happen. We all know it. And so we'll see what happens. But the market, again, what does that create? Uncertainty. The other thing that came out today, we'll just go ahead and talk about it, was the Atlanta GDP forecast. All of a sudden last week it was negative 1.5. Today it was negative 2.8. So we have gone from 3.9% positive GDP down to negative 2.8% GDP in 4 weeks as the 10-year continues to push its way down, and this data continues to come in weaker. So we'll see. Are they right? Are they wrong? We'll get to find out. I mean, it's the Fed and their data, but understand, I'm going to kind of summarize this, and I'm going to talk about it more in Saturday's video because Jim Carsano put out a tweet about this, and if you don't see what's happening right now, it is the Trump administration, they're not worried about the stock market. It's the bond market. It's getting that 10-year down to get borrowing costs going, to get the real estate market going again, all right? Because if the 10-year comes down, you'll start seeing all the tweets flooding out there about the 30-year mortgage rate. It's going to come down, right? Other borrowing costs will come down because a lot of companies who took out all this debt in 2020, 2021, have to come up for refinancing, okay? Or even take more debt out. So don't want to do it at lower rates, right? Because obviously they got it for almost nothing back then. And so that's hurting everything, growth. And then what they're going to do is these tax cuts, which I believe passed the House, hadn't got through the Senate, is remember, the majority of it's going to the wealthy. It's going to the rich. It's a trickle-down economic effect. Okay, that's exactly what happened in 2017, 18, whatever year that one passed. And so that's going to go up there. And I'll tell you a really good story in Saturday's video about this to prove it. I mean, it was literally a moment I will never forget for the rest of my life, right? And so you didn't even have to read the small print on the tax bill that got passed. All you had to do is listen to the story I'm going to tell you and go, wow, that really makes sense now. And so it's going to go up here to try to generate growth, okay? Saying they're going to spend, the rich are going to spend. Because if you look at what they're doing with the budget they're trying to pass, man, I mean, they're actually going to slash the people at the bottom that are already suffering. Yeah, they're going to start slashing welfare programs, Medicaid, all kinds of stuff, right? And so they already got crushed by inflation. Now they're going to get crushed even more. And then if these tariffs actually do kick in and prices do go up for, common day goods that you actually need, well, they're going to get crushed even more. And so I don't think they're going to be very happy. But, and again, it's all about the 10-year yield driving it down while you're trying to, in a way, keep the bond market stable, okay? And I was telling members right now, volatility's moving up in the bond market, spreads are moving up some, this kind of stuff's happening. So we'll see. The big question in everybody's mind is there going to be a recession? And let me tell you something, anybody tells you they can predict that is lying to you. They're absolutely lying to you. Every financial institution has their own metrics they use for that. You see somebody, they'll get it right one time, and everybody thinks they're a genius, and they miss it every other time after that. But remember this, you don't have to have a recession to have a market crash. We learned that in 2022, learned that in 2018, okay? Don't have to have it. All right, well, we'll see. We'll see what happens here. Now, I'll show you what Trump said today, and then we'll go into the charts. And there's something else that it keeps exacerbating these moves. One, we're still in negative gamma, just FYI, so that's going to exacerbate the moves down. All right, if we never get back up in positive gamma, it'll help start push the market up to the upside. But we just can't seem to get there, get any traction. But here's what he had to say, and then I'll show you what happened on the chart. And then we'll go into really the Mag 7, because right now it's all that matters. Right now, as you saw, Nvidia got just destroyed today. I mean, Tesla started to bump, sold off. Everything just went red. All right, and as long as that Mag 7 is just pulling it down, it don't matter what all these smaller stocks are doing, because most of them are green, went red anyway, midday. But again, they're really going to get drugged down if they feel like the market's coming down. And we got the 200 coming up pretty fast on some of these stocks. But here's what he had to say real quick.
The tariffs, as you know, will start a week earlier than the reciprocal, which is going to be on a couple of weeks earlier. Reciprocal tariffs start on April 2nd. But very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico, and that'll start.
And of course, when he said that, boom, here comes the waterfall. See you later. Bye-bye. And so we went down like 0.78% in 10 minutes, right? We just kept going down, actually. So I recorded that. What time was that? Like 3:02 or something like that. And so, and then of course what's exacerbating this is these zero DT options, man. The percentage of total options of zero DTs keeps going up. In February, it's 56%. In January, it's 52%. In December, it was 50%. So what do you think is happening in March? Think it's going to go down? No. And so that's another thing that is absolutely exacerbating these moves for sure. And when we come back over here and look at the SPX, again, what we talk about, 597 is going to be key on SPY right here. And you can see it could not hold. And then it just started, like I said, like a monkey falling out of a tree, man. Just started hitting fibs and support levels, trying to hold 3 times right there at 591.40. Couldn't do it. And once they break, they go down pretty quickly. Okay, once those support levels start to break, And so it's like those houses that are on the edge of the beach right there on those stilts. You start chopping at the stilt. Once one breaks, the whole house goes over, right? And so you can see it. Just down we go. Of course, last 15 minutes, that right there has been just crazy the last few days. I mean, once again, we had the same thing happen on Friday where we were down huge. I mean, probably 2.25% thing on the SPY. And then boom, like almost a full percentage move up just in the last 15 minutes on it. So no surprise there. So I have to, figure out what's going to be support resistance tomorrow. Again, what was support will be resistance now, depending on if they gap us up, okay, once again. But when you look at SPX here, it's cleaner. Both those trend lines. It's trying to hold the other descending trend line right there. But there's a 200 moving average. And it's not far away. And the funny thing is, even if we hit it, it's only 6.92% down. Right now, the SPY is still not oversold on the daily, folks. I don't think the Qs are either, but the SPY is not for sure. So the market's still not oversold on the daily. You just think it is, feels like it for sure, but it's not. And so, until we can start getting above these levels, which really is going to be the gamma flip, which will probably move down tomorrow, but we got to get above 6,000, really. And that's going to be a key level. It's a nice round number. But right now, there's the 200 you can see below. It's just straight up just run us up overnight, sell down the rips, right? So it's the same thing over and over repeated right now as we come down. So we need to get above that 5874 move right there, which will get us above that right there, which was support level. Try to turn that back into support. And if it's going to move, right? Well, we still got to see if these tariffs actually go into place tomorrow. How is the market going to react? I'm going to draw this trend line. If we keep getting rejected over here over the last week, around 5.939 is probably when it'll hit it. But if we can get above that, obviously you might see a decent breakout. But right now, it's a downtrend, right? All the pressure to the downside. And so every single rip is being sold off right now. Look at the Qs. It's almost there. It is almost there, less than like 0.5% away from the 200 moving average. We filled this gap, which I put on here probably weeks ago. So we filled that right there. And so there it is, like, man, 2 points down. So not very far down at all. And this one's only down, 8.7%. It already feels like way more than that. And it's only 9% total. So neither one of them will be in double digits down just to get to the 200, okay? And so we'll see what happens if we're going to get there, because one thing that will happen, most people are expecting, is to get these, every once in a while you get those crazy rallies, right? The market's going to go straight down, get these crazy rallies up. The question is, if we get one of those, especially if we get multiple days, are people going to use it as exit liquidity? That is the key right there. That's what we got to find out. And you can see with SOX. Now, I'll ask you a question in just a minute about that. But you see SOX, again, we'll keep talking about this one because this is under major pressure. It is 10% of the SPY. That's another thing putting pressure on the S&P is 10% as a whole, okay, on the SPY right there. And so this area needs to hold or things get real ugly, okay? You see a 200 moving average. Tesla bounced again on it. It was up. Oh, we're going to the moon. Then it came back down, tested that 200 and held the 200 once again. And again, you would think this moves up unless something happens right here. But I think because most people want this to move up to around, I think it's 327, 328. And so they can try to short this, right? Which would be a good area to short. Don't mean it's coming back down. Don't mean it's going to get there, to be honest with you. Because, again, this move would be nothing fundamental. This would be just a straight up, it's been hammered down, needs a relief rally, try to grasp more liquidity while people load up on shorts. That's all that will be right now for Tesla, okay? Because you see NVIDIA here, who actually does have numbers. Actually had pretty good earnings, unlike Tesla, and this thing got just destroyed today. I mean, I think it was down 8% at one point in time and didn't even get a chance to reject off the 200. Couldn't even make it back up to the 200. So now it's setting this golden fib, which that is drawn from that big rally move right there. And so now we're going to pull up the weeklies, because now we're going to start looking at weeklies now. And there's your 50 moving average. And, you know, closing below that, probably not going to be very good, okay? And so that's not what we want to see happen. Those are very close. But if the whole week, we get to Friday and we close out beneath that, it's usually not good. All right, doesn't mean it's the end of the world, but it's usually not good at all. And that's what you're starting to look at when you start to get these big stocks move down like this. And so if it comes up and rejects off that 50 weekly moving average, which you see is exactly what Google did today, then that can create more downside pressure. But again, when you're beneath the 200, nothing good happens below the 200. Okay, just go ahead and pencil that in, get a tattoo on your chest or something, okay? Now, you can see Google right here as you came up to the weekly, boom, got rejected, moved down even more, okay? Amazon looks like it really wants to get that down there to that 200. It's not very far away, about 3%, really, so not that big a move. And so it's like it wants to come down there. And the Mag 7, a lot of them are green this morning, all went red. You can see it's just continuing to just grind against that trend line. So it just edges its way down. It's not a big waterfall or nothing with that. And just think about this. We're down, but Apple, imagine if Apple joins this party. That's the big thing. If Apple joins the party, we'll get down those 200s fast. But Apple's holding up, okay? Microsoft, once again, holding that 50 weekly moving average right now. You don't want to see it lose it, especially when it loses that little shaded area. We'll draw that trend line. Now, moving up as far as earnings tomorrow, none of this is going to make a big difference on the market, but you have Target, Best Buy, C, AutoZone, PaySafe, EVgo, and then a big one, CrowdStrike right there, and then Ross and ChargePoint, which I still can't believe is a company. No economic data to worry about. And then as far as the data we got this morning, ISM manufacturing was another thing. Down to 50.3, so that's not contraction. New orders were in contraction at 48, dropping from 55. Paid prices, jumped to 62.4 from 54. And then employment fell down in contraction to 47 from 53. So that was the data we got as well, which of course, I mean, you know, the market's going to use it for what it wants to use it for, but that's kind of where we're at. So let me know what you guys are looking at and stuff and how you're playing this and everything. Again, I think everybody's waiting on this relief bounce and stuff. But what I was curious about is if you're loading up down here at the bottom, or for example, with the crypto pop we got yesterday, did you use that as exit liquidity to exit bags? Because you see the big drop it had today. And I'm just curious. Just want to kind of take a pulse of you guys and see how you're feeling and see what you're up to and what you're looking at and stuff. So anyway, hope you got something out of it. Please hit the like, subscribe button on your way out. Thanks for all you guys who share the video and hit that thumbs up. I really appreciate it. And thank you for signing up for membership. Less than the McDonald's combo, and that's everything you get with it. And I'll see you tomorrow.